But I'll caution our viewers that my list might be quite different from other people's lists. This time of year, the forecasting business is at an all-time high. Everyone's got, stock market projections or bond market projections or things to look out for in 2023, and that's fine. A lot of good contributors from a lot of sources, but based on probably the way I combine not just economics, but also geopolitics, bring them together. They've always been connected to some extent, but they've never been more interconnected, more merged than they are right now. And so I think bringing that perspective will maybe give us a different list, but that's a good thing because we can contribute something the viewers might not be hearing elsewhere. I would drop one footnote to your introductory remark, Robert, about a younger generation. Yeah, 30, no reason to pick on 30-year-olds. If you're under 50, you've never seen some of the bear markets, something like the Great Depression. So if you're, say, younger than a certain age, and it's way over 30, you've never seen anything like that. I've seen some of it, and I also read quite a bit of economic history. I wasn't around for the Great Depression. You have to be 100 years old to say you lived through that one, but I'm pretty familiar with it as well. But the one footnote I would drop is that you said people haven't seen these kind of market crashes. Well, not the Great Depression, that's for sure, but they have seen market crashes, but they've also seen it come back every single time. And that's what's different. So yeah, we got through 1998, we got through the dot-com crash, we got through 2008, we got through 2020 and COVID. There's actually a good size market drawdown in 2018 between October 1st, 2018, and Christmas Eve, what I call the Christmas Eve massacre. Stock markets dropped 20% in under 3 months when the Fed kept raising interest rates, even though the economy was weakening. So they have seen those, but every single time it came back, even in COVID, March, April 2020, the stock market went down 30%. It did. I mean, just almost straight down. But by September, we were back to new all-time highs. And so it's not that they've never seen that kind of volatility, but they learned the wrong lesson, which is it always comes back. And we know why, because the Fed bails you out, the Fed floods the zone with money, the Fed talks it up, et cetera. But the counterexample in 1929, when the stock market did crash, it was down 23% over 2 days. It was like a 12% day and an 11% day in late October 1929. But it kept going. The stock market crashed in October 1929, but it bottomed in June 1932. That was a 3-year moving crash or rolling crash, whatever you want to call it, with some rallies along the way. And the total damage was over 80%. Not 30%, not 40%, down 80%. And what people don't know, many people don't know, is you said, okay, then it rallied in 1933 and 1934. The Fed messed up again and blundered again, as they usually do, in 1937 and threw us into a double dip. But if you ask people, okay, well, everyone knows the stock market crashed in 1929. When did it regain those highs? How long did that take? The answer is 25 years. It was 1954 before the market recovered from 1929. Now, it doesn't mean there weren't gains along the way or you couldn't make money. You could. But if you say, oh, I'll just sit tight and wait till it comes back, well, a lot of people didn't live long enough. They didn't live 20. They never saw their money back because they didn't live 25 more years. So that's a real bear market. It's happened before. And so the point is you need to be prepared for things like that. And no one alive, but very few people alive have seen anything like that. So that's I think that's the right framework to put it in. And if you say, well, what if we had another market crash right now? We'll talk about reasons why in a second. Why couldn't the Fed just come right back in and, print some more money and do the same thing over again and bail out the new failures, whoever they may be, whether it's, I call him Sam Bankman-Fraud. He's a serial killer. And this guy, Sam Bankman-Fraud, is a serial killer of net worth. But, there's you can just kind of keep bailing things out. Why not do it again? What's the big deal? Well, the answer is each bailout is bigger than the one before. And that's the point. You can go all the way back 1994, Mexico, 1998, Russia, LTCM, 2000, dot-com, 2008, Lehman, 2020, pandemic. And they do bail out, but each one's bigger than the one before. I mean, we threw out 6 or 7, actually, I think $7 trillion of new debt on top of a $1 trillion a year baseline, $7 trillion in new debt to kind of dig our way out of 2020. So there's a limit. There comes a time when it's like, hey, this bailout is going to be 20 trillion. Sorry, that check's too big. We're going to have to let some things fail. So what could happen? The first thing on my list is the China COVID situation. Now, let me just kind of give a quick background and I'll explain what China's doing and why it's going to fail and why it's a really, really big deal. For the last 3 years, they've been pursuing what's called the zero COVID policy. And zero COVID means what it says. So like if there's one person who gets infected, they quarantine you in your apartment and using extreme measures in some cases. They've actually had teams come in hazmat suits and weld steel I-beams to the outside of your door so you couldn't get outside your apartment. If 7 or 8 people get it, they shut down a whole neighborhood. 30 people, they shut down a whole city. We're talking Shanghai, 26 million people. Beijing, 22 million people. And other cities, Xi'an, Chongqing, I've actually been to Wuhan, I've been to all these cities, and they're huge. Nobody in, nobody out. Or if you do, you have to have a negative COVID test, but it can't be more than 48 hours old. So you got to get tested 3 times a week. And they have testing tents every 3 blocks in the city, and masks and all. By the way, none of this stuff works, by the way, but they make you do it. They have COVID concentration camps where they ship people outside the city limits and put them in quarantine, etc. Extremely, extremely damaging to the economy. Can you contain the COVID? Yeah, but at a multi-billion-dollar cost, not to mention social disruption, etc. And it doesn't work in the long run. It can contain in the short run at enormous cost. Absolutely does not work in the long run. Well, but it was all done for political reasons because Chairman Xi Jinping wanted to get his 3rd term, unprecedented, by the way, since Mao Zedong, as the new emperor, the new communist emperor of China. So he did. He got the 3rd term, and here we are. So suddenly there are massive riots, demonstrations all over the country, breaking down barricades, tearing down testing tents, storming through cities, hanging banners. And if you're the leadership, do they care about people's welfare? No, but they remember Tiananmen Square, 1989, when they put it down by killing thousands of people. No one knows how many, but they massacred 3 or 4, perhaps more, thousand people in and around Tiananmen Square to suppress that. And they saw it sort of happening again. So they threw in the towel on COVID. They said, okay, we're just going to let it go, let it rip. They don't put it that way, but that's what they're doing. And they're saying, okay, now you can self-quarantine. You don't need tests. You don't need travel permissions. You can just go, but, be careful. Wash your hands, basically. So what's going to happen next? Everyone, and of course, Wall Street has always got the pom-poms out, the Wall Street cheerleaders, buy stocks, buy Chinese stocks. I wouldn't touch China with a 10-foot pole or maybe a 6-foot pole, since that's the social distancing range, which is another piece of medical nonsense, by the way. But so the bulls are saying, well, now get in China because they're reopening and they're going to get going. It's not going to happen. It's not going to happen for 2 reasons. Number one, this thing's ripped. Now, the math is pretty simple. It's not complicated. It's a population of 1.4 billion people. Assume a 30% infection rate, which I think is conservative. A lot of estimates, some people say 50 to 60% before you achieve what they call herd immunity. But let's just say 30% to be on the conservative side. That's 420 million people are going to be infected with COVID in the coming months. 420 million. That's 30% of 1.4 billion. So that 420 million infected, that's with a 30%. By the way, that number could be 600 million if you get up to a 60%, even a 50% infection rate. Let's just say 420 million. The fatality rate is 1/4 of 1%, which is quite low, meaning 99.75% survival rate. Well, that's the good news. The bad news is 1/4 of 1% of 420 million is a million. You're talking about 1 million dead. And again, that's that's conservative. Some estimates, again, I've seen 1.5 million. 1.5 million dead, okay? But how many are in hospitals? How many are in ICU beds? They don't have the ICU beds. They have some, but they don't have nearly enough to. So it's not just a question of the fatality rates. It's a question of what can you do to offer medical treatment or any kind of assistance to the 400 million or more people who are infected. So first of all, that's going to shut down that's inevitable. That's the math. It's not speculation. That's going to do more damage to the economy than the lockdown. In other words, the zero COVID policy. In other words, China has no good way out, because zero COVID, you're going to cause a revolution, and it doesn't work. If you let it rip, you got 1 million to 1.5 million dead. Plus, go to your local CVS or Rite Aid or Walgreens or whatever pharmacy you have. Try getting ibuprofen, Tamiflu, just over-the-counter medications. What when I was a kid used to call it cough medicine, but whatever, the equivalent today is. Can't get it, or the shelves are bare. Because why? We get that from China. 80 to 90% of those over-the-counter medications come from China. The Chinese know what I just said. They know their medical facilities can't handle